In this video, we are going to talk about the Bank of Nova Scotia stock. So before starting this video, please like this video and subscribe to this channel for our future updates. On the last day, Tuesday, June 29, 2021, the stock price of Bank of Nova Scotia fell by -0.0615%, from $65 to $64.96, and has now dropped for 3 days in a row. The stock fluctuated 0.63% throughout the day, from a low of $64.87 to a high of $65.28. Although the price has risen 6 times in the last 10 days, it is still down -2.54% for the period. Volume declined along with the stock on the last day, which is a good sign because volume should follow the stock. The trading volume dropped by -787,000 shares on the last day, totaling 819,000 shares purchased and sold for $53.20 million. In the short term, the stock is trading near the bottom of a weak rising trend, which could indicate a good buying opportunity. If the lower trend floor at $64.25 is broken, it will signal a slower rate of rise in the short term, but it might also signal a trend shift. Given the current short-term trend, the stock is expected to rise 7.65% over the next 3 months and, with a 90% probability, end the period with a price between $69.16 and $74.80. Bank of Nova Scotia, TSX, BNS, NYSE, BNS, just announced good quarterly performance. Investors who missed out on the recent share price increase are wondering if now a good time to acquire Bank of Nova Scotia stock is. Earnings. Bank of Nova Scotia earned $2.47 billion in adjusted net earnings and $1.90 per share in fiscal Q2 2021, up 81% and 83%, respectively, from the same period last year. In comparison to 8.2%, the return on equity was 14.9%. The CET1 capital ratio of Bank of Nova Scotia was 12.3% at the end of the quarter. This is far over the minimum criteria, implying that the bank has sufficient capital built up to weather the epidemic. In comparison to fiscal Q2 2020, the Canadian banking division had a solid quarter. The adjusted net income was $931 million, up 94% from the previous year. On a year-over-year basis, international banking net income increased by $247 million, or 143%, to $420 million in the quarter. In the Pacific Alliance countries of Mexico, Peru, Chile, and Colombia, Bank of Nova Scotia maintains a significant presence. The pandemic slammed Latin America hard, and it will take time for the countries to recover. Rising oil and copper prices, on the other hand, will hasten the recovery in these economies, benefiting Bank of Nova Scotia. Longer term, the Pacific Alliance market, which has a population of over 230 million people, has promising growth potential. Banking penetration is still low, but a growing middle class should boost demand for loans and investments. The bank might use some of its excess resources to make more strategic acquisitions in the region, according to investors. Dividends. The Bank of Nova Scotia has a long history of increasing dividends. During the epidemic, the government required all Canadian banks to halt dividend hikes. Bank of Nova Scotia and its peers should be able to raise dividends again later this year or in early 2022, now that the economy is starting to improve and the banks have weathered the storm better than expected. A 4.4% dividend yield is available to investors who purchase the company at its present price of $81 per share. Risks. This year, the government's aid programs will come to an end. The Bank of Nova Scotia will be able to withstand the blow, but once the economy is forced to stand on its own, there may be a few poor quarters. Interest rates are also a worry in the medium term. Inflationary pressures could compel the Bank of Canada and the Federal Reserve to raise interest rates sooner than expected, raising variable rate mortgage rates. Variable rate mortgage rates. The bond market could crash as a result of the expectation or announcement of higher interest rates, causing fixed-rate mortgage rates to rise. When it comes time to renew a mortgage, homeowners who see a significant increase in rates may be obliged to sell. If a large number of people find themselves in this scenario, the housing market may see a significant correction. Bank of Nova Scotia has $257 billion in mortgages on its books at the end of fiscal Q2 2021. More upward movement is expected until a new top pivot is discovered. Negative signals were also sent out, and these could have an impact on the near-term trajectory. The stock of Bank of Nova Scotia that has sell indications from both short and long-term moving averages, indicating a more bearish outlook. In addition, when the long-term average is higher than the short-term average, the relationship between the two signals generates a general sell signal. The lines at $65.03 and $66 will provide some resistance on upward corrections. If a breakup occurs above any of these levels, buy signals will be issued. Furthermore, the 3 months moving average convergence divergence is currently indicating a sell signal, MACD. During the previous trading day, volume fell in lockstep with the price, lowering total risk because volume should follow price movements. The stock received a golden star signal asterisk for the short term on Wednesday, April 21, 2021, as well as a golden star signal for the medium term on Tuesday, September 29, 2020. How did the bank fare in the first quarter of 2021? On February 23, Scotiabank released its fiscal 2021 first quarter results, reporting adjusted net income of $2.41 billion, or $1.88 per share. Its adjusted net income increased by 3% over the prior quarter. Scotiabank had a strong quarter as the economy in Canada and throughout the world strengthened. In its domestic activities, adjusted net income increased by 1% to $915 million. Lower provisions for credit losses and non-interest expenditures helped the bank. Because of its regionally diverse operations, the bank is frequently referred to as an international bank. It is well represented in Latin American countries. The bank's operations in the region were severely harmed as a result of the pandemic's economic consequences, although they have recovered in recent months. There is still a lot of space for growth in the Latin American market. On a year-to-date basis, Scotiabank's adjusted net income from its international banking sector fell 35%, leaving plenty of space for growth as the region's conditions improve. What might investors expect from the company's second quarter results? On June 1, Bank of Nova Scotia will report its second quarter earnings, and it appears to be well positioned to benefit from a recovering market in Canada and Latin America. In the second half of the year, the Bank of Canada forecasts significant economic growth. Early on, Canada lagged behind its peers in vaccine introduction, but it has recently improved its vaccination rates. COVID-19 infections have been steadily declining in Canada as immunization rates have improved. Rate hikes may occur next year as a result of increased economic development, although the country faces obstacles in the next quarters. In April, the Canadian economy shed nearly 200,000 jobs, including 129,000 full-time employment. Due to the lack of a summer reopening, the economy may miss out on a boost. Despite the global health crisis, Scotiabank and other big financial institutions in the country can still gain from a thriving housing market and improved savings rates for Canadians. Is it a good idea to invest in the stock? The stock of Bank of Nova Scotia isn't cheap right now, but it's a decent buy and hold option for income investors. Given the extent of the company's cash hoard, you get a terrific dividend yield, and the next several payout raises are expected to be large. If you enjoy the stock, I'd start with a half position today and increase to it when the price falls. What do you think about our video? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.